let's switch it over to gold. Okay, so gold. So gold had an interesting day. I'm actually going to clear this off. I'm going to bring it right back down to here. Okay. So if you were on stream with me in the morning, I'm going to bring this to the 4-hour. Let's turn off my bank zones here. Right, if you were on stream with me this morning, price was probably around this area, maybe even below that area. Maybe price was like around here when we first came on. Okay, so just in looking at this, and I'll take this candle away so I don't distract you. When I come into the charts here, I see a few things. Okay, I see a W sort of, right? So I see price made a low here, and I see that this low is higher than this low, right? So we're gonna say this is a higher low, right? Which is an indication of an uptrend. Okay, I see that. And then I kind of zoom in and I look at the details. I say, okay, what do we have here? Where's the recent support or resistance that was broken? So if I'm looking here, we have a resistance right here that this 4-hour candle is breaking up above. Okay, so the first step I do is I look for support and resistance. I'm like, okay, we're breaking above. I see we got a higher low. I see that this is a bullish candle, right? I can see this candle had a steep wick rejection. That's a liquidity grab right here, right? And the reason why this is a liquidity grab is because this wick completely took out these lows. Okay, if you look at the two candles before that, look at where the wicks were. They were up here. So I'm actually going to draw a line so you can see. We had a wick here. We had a wick here. Let me see. Right? What happened with this next candle? This next candle took out those lows, right, and created a bottom wick down here. Okay, so that's what we call liquidity grab. All right, that's the market maker taking out people's stop losses before taking a huge push to the upside. Okay, so you're going to see that a lot. The more you recognize liquidity grabs, the more it's going to help out your trading, because you're going to say, oh, okay, the market makers are taking people's stop losses out because it's going to get some volume. Okay, so another indication of going bullish. Okay, notice all the details I'm pointing out to you. See, these are all the things I look at before I take a trade. You know, I'm looking for confluences, you know. Okay, and then the next thing I'm going to look at is, okay, if this is going to be bullish, where is my range for price to drive up? So if I look to the left, I see this nice big candle right here. I'm going to say, okay, we got this nice huge range here to fill out. And then that's my analysis for the day. You know, my analysis is, okay, we're going to move up bullish. We're going to fill out this area. So I'm going to put this candle back. We go back down to lower time frame here, and I'm just going to go to the 15-minute. And I'm just going to take this out for when I start my stream. I start at 7 o'clock. Okay, so I start around this time. So when I go to a lower time frame on the 15, I'm going to look at this and I'm going to say, all right, well, I wanted price to fill out this gap. However, price kind of already filled out this gap, right? We already got up to here. Okay, so I'm very aware that price created a resistance here, and that if we do continue bullish, then we need to indeed break this zone. Okay, so the next thing I would do here is say, okay, is it even worth it for me to continue taking a buy? Is it worth it? Right? So what I would do is I would take my measuring tool and I'm gonna measure this out and I'm gonna say, okay, how big is this gap? This gap is 270 pips. Now, I don't know about you, but 270 pips is a big enough gap for me to take a trade, okay? So the next thing I would do here is I'd put a zone here. And I say, all right, possible buys above this area, right? This is the rest of my clean range for price to fill. Okay, it's a really huge gap. Okay, and then what I do is I turn on my sessions, right? Let's turn on our sessions. Now, London session is still open here. So technically, we can't really say that this was the high of London session because London session didn't close yet. So if we fast forward, okay, we have New York session here, right? So if we fast forward, this is now London session highs. Okay, so I'm just giving you that reference. All right, but if we come back here, I just want to show you the trade that I took. I think it was right around here. Yeah, it was right around here. Okay, let me put this, it's on the 15-minute. So I'm going to turn on my bank zones now. And if you watch my channel, you know that I use my bank zones to take entries. So you're going to see that we have a bank zone right here. Okay, you see that dotted line? And then the next bank zone is right here. So within theory, the way I trade is if we have a closure above a bank zone, right? This candle closed above, then in reality, we should be able to get to that next bank zone, which is up here. Okay. So my thought process was, all right, if we're closing above here and if we are going bullish, if everything lines up, I should be taking an entry on the next candle. Now, what I look for in the next candle is I look to see if price, my fault, this is the bank zone. Sorry about that. Here we go. I'm going to take these X's off. I'm going to put those black lines there so you can see the bank zones. So in theory, I'm looking to say, okay, if price closes bullish above this bank zone, I'm looking for the next candle to drive up. Now, for me to take an entry, you know, I'm imagining this in my head. This is what I'm picturing in my head, a big breakout to fill this out. For me to take an entry, what I like to see is a wick down. Okay, if I don't get a wick down, I'm not entering. Because to me, a wick down rejection is price rejecting. So let's check out the next candle. Bang. So this next candle actually came down, created a wick right on top of my zone. Okay, then it started pushing bullish. And it started breaking the highs here of this candle. I'm just going to put a line here. It started breaking the highs of this candle and it started to turn green. So I actually had taken an entry here. Okay, I took an entry, put my stop loss below, and I was thinking, okay, come back to the 4-hour. I was thinking, okay, price cannot just only go to this zone, but we do have this huge wick right here. So I was thinking for price to not just fill out this wick, but if anything, go to this bank zone. So I was looking for like a 30 pip trade, but it didn't work out. It didn't work out. You're going to see that price ended up closing back down here. So when price came all the way up here, I actually had moved my stops to break even. Okay. So my stop loss was at break even. So I actually got taken out here at break even. And that's unfortunate, but it happens. You know, if you're wondering, Lens, why did you move your stop loss to break even so quickly if you expected your trade to go this far up? Well, number one, you see this resistance I have here? If we look on the 30-minute, look at this zone. Okay. So even though my targeted zone is in this area, we do have this minor resistance here. So my theory was if price came up here and had trouble, and then if it came up here and it started playing around, it started having trouble again, that's why I moved my stops to break even. I said, uh-oh, we got a little trouble. The candle's kind of staying around this price. You know, price was kind of playing around here. So if it's going to play around here, I'm going to move my stops to break even, secure it, you know. I'm not going to risk 20 pips. So this ended up being a break even trade. Also, I do know that news was coming out later on. So if I come here to Forex Factory, we have news at 8:30, right? We have unemployment claims. Okay, so I knew that we would possibly get a trade here. So after that, if you were on my stream, I still wrote, I said, if we respect 1830 here, if price stays above this area, we should continue to push bullish here. So if we go forward, bang, there we go. We got a liquidity grab on this candle. Okay, this was 8 o'clock right before the news. Had this long liquidity grab, and then we closed above, right? We closed bullish. Now you may be wondering, Lens, if you expect the price to go bullish, why didn't you take an entry on that news candle? Bang, here's the news candle. This is what happened. I'm going to show you on the 15-minute, actually. So I had planned to take a buy on this news candle, but this candle, I kid you not, the last 3 seconds of it was up here. Okay. The last 3 seconds was up here. Okay. And then immediately when it closed, it shot down and it closed right here. And then this candle, literally when it opened up, it was already like right here. So it was very quick. It was so quick. It was like you had like no chance to get in, you know. So what I want to say here is my theory was for me to take buys, I know that news candles are so quick. I know that I need a pending order. I know that I need a buy stop. So my problem wasn't that I knew it was going to be bullish. I knew I was going to take a buy. But the problem was, where do I put my buy stop, right? Where do I put my buy stop? Because if price is still up here in the last 2-3 seconds, then I don't really have time to put in my buy stop. And I'm going to tell you this from my own perspective. I've had trades in the past when I was learning how to trade where I would put a buy stop in before news starts. Right? I'll put it like right here and it would get activated. And I'm like, wait, why did my buy stop get activated if price never came up here yet? Why did it get activated, right? Before this candle happened, right? Before this candle, it would get open. I'm like, what? And I'd be in drawdown, and price would wick down like crazy and I would lose, and I would close my trade. So I learned my lesson. Number one, if you can't get a good buy stop, do not put a buy stop near price because the spreads get higher when news is about to approach. Okay, so the spreads shot up. Okay, so I did not want to put in my buy stop. Does that make sense in the chat? Let me know in the chat if that makes sense. Okay, so it's just from experience of losing. Okay, experience in putting in buy stops, having to get activated when price didn't even hit it yet, and just understanding that the spread's going to be high. All right, so again, but you could have taken a market buy. It just would have been higher, right? If you took a market buy in this candle, which a lot of people did do on stream, they did. If you took a market buy, here's the thing. You wouldn't have got in down here. You would have got in like up here. You probably would have gotten way up here if you took a market buy. But it is what it is. As long as you understand that the spread is high. Okay. Good info, you understand? Okay, nice. So yeah, so we had this news play out. And again, if we look at what the results were, I told the chat before it dropped, I said, if unemployment claims is bad, right? If this number is red, gold is going to shoot up. Now, how did I know that? Well, I didn't know if the news was going to be red or not, but I did know the results of the news, how it would play out, right? So let me draw this picture for you. USD, right? If people are losing their jobs, right? Let's put a sad face. Losing their jobs, then people don't have money, right? They don't have money to spend, okay? No bueno, right? No good, right? So the way that affects gold is that drives the price of gold up, right? That makes the value of gold go up, okay? That keeps it at a higher value. So that's why anytime you get bad news on unemployment claims, stuff like that, you're going to see gold shoot up, right? So you may want to write that down in your notebook. Okay, and the way I like to tell people is if it helps for you to remember, think about a Lamborghini, think about diamonds, think about a Ferrari, think about luxury brands, Louis Vuitton, I don't know. Think about things that cost a lot of money, right? Why can't I buy a 2005 Lamborghini? Why is it still worth hundreds of thousands of dollars? Because it's not something easy to get, right? It's not easy to get. Okay, so in that sense, it's the same thing like gold. Okay, if people are losing their jobs, people don't have money to buy things. So if they don't have money to buy things, then it's hard to get, right? It's hard.
What's up, traders? We're looking for more people to join our free Discord channel for Forex traders. Inside, you'll get our weekly watch list. You'll see trades that we're taking with full breakdowns and explanations, and so much more. Join us by clicking the link, and we'll see you inside the Discord.